Across to Probal Sen, who joins us to help us out with some quick analysis on the oil and gas space. Hi, Probal. Good morning and good to see you. Ben, let's focus on the OMCs first. BPCL, what's your view on the numbers?
I've said this earlier. I must apologize for BPCL and IOCL. We are not allowed to sort of speak since they're on our restricted list. So I can speak on the numbers in terms of meeting. I think both IOCL, HPCL, and BPCL, if you notice, one thing is that the GRMs seem to have disappointed the street. One idea could be that the extent of Russian crude advantage probably has reduced to a certain extent, specifically looking at HPCL's numbers where GRMs came in below estimates. Plus, there could be some inventory impact there. Analyst calls are actually going to be held today, so we'll get more insight on that. But other than that, I think refining throughput and marketing volumes in particular seem to have come in ahead of estimates, and implied marketing margins also seem to be holding up. So to that extent, I would say the results, while a tad below, I think, street estimates across the board for the three, I think the prospects probably appear better, specifically now that the crude prices have started to cool off a little bit. So the pressure on marketing margins will also ease up. While for GRMs, in any case, I think some normalization was probably bound to happen after the kind of levels they have been hitting over the last couple of years.
Okay. By the way, the pre-opening rates are settling right now, and it's quite eerie, actually. It's very quiet. I don't know which way things are going to go, but for now, there's not too much action happening after the big fall yesterday. Let's see whether there is any recovery in store today, but right now, very, very quiet. Probal, good morning, and thanks for joining in. I wanted your thoughts on Mahanagar Gas. Across the board, it seems to be a disappointment. The volumes were below estimates. Margins are down 350 bips quarter on quarter. What do you do in that stock?
For MGL, what is important, in terms of volumes, to be honest, they were broadly in line, in fact, slightly ahead of at least our estimates. I'm not too sure what the street was looking at. So to that extent, we are not too disappointed with the volume performance. Margins, yes, have come off primarily because the gas costs seem to have come in a bit ahead of what we were looking at. Realizations, I think, are broadly in line with what we were staring at. If you look at FY24 average margins, they still are well above their historical levels. We'll have to understand from the management a bit more in terms of why the gas costs have risen. One of the reasons that has been cited, at least by IGL, to put a parallel, is that the allocation of domestic gas seems to have gone down even further in this quarter. So perhaps that could have been a reason to a certain extent of the disappointment as far as margins is concerned. But more important would be what happens to the margins basically going forward. What kind of allocation is being guided to by the government for the priority sector going forward for the next couple of years, and what kind of contracts do these companies have to mitigate that. So we'll have to get a little bit more insight. Yes, but on the face of it, this quarter has been a little bit of a disappointment from the margin standpoint.
Disappointment from the margin standpoint. ONGC, I mean, any thoughts here? Probal, morning.
Morning. Our view doesn't really change much as long as crude remains comfortably above $75. What happens to the crude prices, hardly really matters. The government has been extremely, extremely proactive in terms of maintaining the windfall taxes at a level that allows a realization of around $75 to $76 for both the upstream companies. So that, I think, creates a little bit of comfort. Gas prices are also broadly fixed for about 95% of the portfolio at $6.5 for this year, going to about $7 for next year. That is also, again, well above historical levels that they weren't. The critical issue continues to remain: how does the KG Basin asset actually perform over the next couple of quarters, and indeed the next couple of years? As long as that production growth continues to be in line with what the management has guided, I think ONGC should continue to do well from both an earnings perspective as well as a stock perspective.
Okay, thanks a lot for that, Probal. Great speaking with you on the channel. Thanks for joining in. So that's the outlook on the oil and gas sector. But we have a large market to trade, and after yesterday's